Hey everyone, this is Ryan B. with Practical Forex Trading. This is your weekly analysis for the Australian dollar, US dollar. It is January 12th, 2020. If you want to stay up to date on all of our Australian US dollar weekly analysis videos, make sure you click that subscribe button in the bottom right hand corner of the screen. Okay, so we see here is a daily chart, and my current sentiment is bearish. And what we see is we've got price traveling just below this week's pivot point. So 0.6903 is a pivot. And what we find there is this is a pretty significant price point over the last year. And if we go back even further, we can see price kind of plunges and stay back above this zone here. This chart here, downtrend, goes back a couple of years. This is very similar to the euro price chart, and we see after making new highs, price last week, 2 weeks ago, pushing above 70 cents, was quickly rejected. Similar to what we see back here. That happened in the summer of 2019. And we've got our first weekly S1 at 68.48. Now, that would mean price staying in this little triangle here. So we've got price caught in a wedge, but it is a descending triangle formation. Let's go ahead and mark up that wedge. You have to be careful on price wedges because price will ricochet up and down off the ceiling and the floor, and then before dropping out, falling out the bottom. So what could happen is if we see a break above 69.03, a sustained break, we could see price travel all the way up to 69.57, which is our weekly R1. But if it did that and then retracted, it would still be on the downtrend. So we've got this descending parallel trend channel. We have this pivot resistance line. Now, we do see that this short sloping uptrend has been going since October. So let's go ahead, zoom in the 4 hour and see what that looks like. There we go. Okay. So here's how price is moving. It's approaching this wedge. It looks like we might have a short-term sell, but we might only get about 50 pips out of it. And if I was selling this, I would either wait for a retrace to the weekly R1, or I'd sell and put my stop here above the pivot. So this uptrend since fall, we've got some pretty significant bottom peaks here. So we look, here's the bottom of our trend. Price is moving above that. And if we set a parallel channel in a shorter term, you see prices kind of honoring this trend line. It's been going up for a few months. So once again, that supports the theory that price will soon be in a wedge, right? Price could ricochet like this for a while in this little zone here. If the bulls continued, it would eventually push out the top and stay a sustained break above 69. Or we could see a visit to 69, then the candles close below it, pushing this down further. But either way, if the price is going to continue into a downtrend, it'll need to work its way through this weekly S1 and then through this price, this upswing that's been going since the fall. So I can see a lot of congestion ahead. We see last time price was in this range between 69 and 68.50, that there was a lot of congestion too, more of a range trade. So you can think about this as a range trading opportunity. We're going to buy the bottom of the range, right, and then sell the top of the range. But just keep your expectations limited to how far price will move. It's more than likely price will hang out in this wedge for, look at the calendar here, could be for the rest of the month, rest of January, with attempts to pierce through. So if you're selling, then you want to look for the next high, which could be where it's at, or we could see price jump up a little bit, then sell back down to this triangle. If we look at the 1 hour, let's get even smaller. We see here is where price is trending. So then I definitely, if I'm going to range trade this is my ceiling. below 69.20, and I'm going to sell down to 68.60. So just be careful. You can make some pips off of that, but be aware that as soon as price comes and touches down here, it could swing back up. All right, let's go ahead back to our daily. So I like to use daily as my big barometer, if you will, my market barometer. That is the superseding trend, daily and weekly, that is more powerful than the 1 hour and 4 hour trends. So this 2-year descending trend line is ultimately more powerful than something that's been going for a few months. It may not seem like that, but over time, the larger trend typically wins. Let's go ahead and throw our moving averages on here. That's our 20, that's our fast. We're going to go with our 50. That's our medium, that's our red. And let's go ahead. And that's our long. Okay. So we see that price is just hovering above this 200-day moving average, right? But if it doesn't hold and price closes back below it, we can expect more downturn. Let's look at the last time this happened. That price came up and touched right here. Let's go back to the chart a little bit. We see price came up, stayed above the 200, and then dropped from 72 cents all the way down to 68.80. Price went up and touched it again at 70.80, just below 71 cents, fell all the way to 66. It had a big extreme gap. So we could be looking at our next big swing down. Just got to get through this congestion here, and then we look for price to return to its last lows. So let's say we're bearish. We'll go ahead and remove these. And then we'd be looking all the way down to about 67.50. So have a good trading week. Hope you get lots of pips. Be careful for this upcoming price wedge zone that you don't get stopped out. All right, have a good week trading.